Ladies and gentlemen of the crypto space, we're live on a Tuesday. It's not a Monday, yes, at 12:49 p.m. A little abnormal, but we didn't have a stream yesterday, so why not? Let's get some content out there. There was some speculation over the weekend that we might open good. Turns out it's about lackluster, horizontal, a little bit not not exuberant to say the least, and that's on the backdrop of basically what gold's doing. And gold's doing what it's doing in response to what global bond markets are doing. And if you look up corresponding data, aside from what Kobayashi is talking about here, is interest rate cuts by central banks around the world, and it's a tremendous amount of interest rate cuts. Yet this particular post is clarifying that even with the interest rate cuts, the long end of the global debt market, interest rates are going up. So the price of money is another way to define what interest rates are. And the long end of debt markets, 10, 20, 30 year, and sometimes longer, depending on the country, is the market setting the price of debt, whereas this Fed funds rate is intrabank, the interest rate that banks lend to one another. And it's well known that the Fed likes to think they have control over the short end, which is less than 10-year issuance of debt. But as the market shows, it's kind of that they don't have control over the short end or the long end. And we're on this backdrop of just tremendous fiscal spending around the world that they're borrowing and borrowing and borrowing. So the whole system is coming unraveled. The whole system looks like it's going to explode and debts aren't going to be repaid and pigs are going to be flying and some mystical creatures are going to start walking through the streets and you're going to be like, what the hell is going on? So when I say things like that, that's really what everyone's expecting. They're like, oh my God, everything's so bad. Everything's going to fall apart. Now, that's just part of the equation. And that's something that I've learned in my personal life because you can't account for what the entire planet's going to do. And you can't account for geopolitical collusion. And you can't account for the the capacity for vested interest to existential or to survive existentially survive. And isn't it remarkable how time and time again throughout history, uh, systems and governments and politicians that are that experience scandal survive and things keep on going on. S- That's generally my mindset. And it isn't like, oh, in 2020 they were able to print their way out of it. I understand the arguments for why they can't necessarily do the same thing they did. With the frick's going to buy the debt, but that's irrelevant. It's not that it's not that they can't print their way out of it. It's that they can always mutate the implementation in infinite ways to achieve their three mandates there, as in government or the system. And that's the most important thing to understand. The three mandates is what I mentioned the other day. Three mandates is to incentivize productivity, which is basically work and compensation. You go to work because the boss is like, oh, if you come to work, I'm gonna give you something, and then you're like, what do I want? I want money because I go into the grocery store and they want to charge me dollars. So I say to my boss, for this work, for this productivity, I want you to give me dollars. And your boss is like, okay, that makes sense. Here's your employment contract or your relationship. So incentivize productivity. So you might think of work as work, but it is a much more philosophical, conceptual structure than what most people think it is incentivize productivity. So that's what a good part of money is. People define money as what, a unit of account and medium of exchange, and I'm like, what the fuck? So I go a step further. Incentivize productivity is the purpose of money. Number two um, is the finance social order. So what does that mean? So in 2020, they said everyone's going to shut down stores, businesses are going to be closed. So the government's like, all right, we understand you're going to do this, so we're going to pay you. Yeah, and we're going to be like, oh, we just shut down our business, but you just paid us. You just gave us a lot of money, so we're not going to freak out. So that's called financing social order, and that is kind of like an airdrop of sorts from the government. And the third, the most insidious purpose of money is very simple, yet it's very much overlooked by the majority, is to ration natural resources. And natural resources may or may not be what you're thinking. So everything's a natural resource, literally cars, because cars contain steel, copper, plastics, which are oil derivatives, literally natural resources. So everything is a natural resource. Everything. Um, so the rationing of natural resources is done vis-a-vis price go up. As the price goes up, fewer people can afford specific natural resources, be it consumables or discretionary spending items, what have you. So inflation, quote unquote consumer price inflation, is how you ration natural resources. So this is the purpose of money. Finance social order, ration natural resources, and incentivize productivity. Unit of account and medium of exchange, they say. It is, so I've gone ahead and defined things a little bit more structurally, a little bit higher level, a little bit more 20,000 foot view. So my perspective when I see data is, okay, what does it mean? What does it mean at the most important level? Way up there. What does it mean way up there? 20,000 foot. Everything else is noise. Everything else is going to drive you nuts because you're going to stare at collapse, bond market, G7, which is basically all the large countries, their bond markets are collapsing, and you immediately go to hyperbole and panic. Ah, it's all collapsing. Now, that's why I came up with my capital management methodology. It's a methodology that traverses all terrains. So there's more than just the three rules. The three rules are portfolio management and just they're the rules that encapsulate what to do with assets. Now, obviously, I don't really have a rule for cash position, but you clearly need a cash position because you can't go to the grocery store if you can't pay for things. So, how do you manage the cash position? Maybe that warrants three rules or additions to the rule set. I don't know. I don't really like the idea of complexifying the rules. I think the three rules are great. I think there's just ancillary procedures or additional things to consider. You can't neglect the cash position. So when I see this collapsing of the bond market, I say to myself, I'm going to do exactly what I've always done. And what I've been doing is right. Manage your assets. Follow rule number one, own more assets. Rule number two, know when to stop owning assets. And rule number three is fuck you, pay me. So rule number two might be coming to people's minds right about now because there's some discounts. Things are looking quite reasonable or relatively reasonable. Okay. Now, the problem with reasonable pricing is what's your starting position? Are you a person that's just getting into the market, or are you a person that is already in the market with a whole bunch of assets and you're questioning, did you buy the right assets? And you're freaking out, should I rebalance my portfolio? Do I sell this? Do I buy that? And you're going to drive yourself nuts. Now, here's the kicker. Part of the three rules is there's no sell assets. So I don't really have that embedded in the three rules. And we've done some portfolio adjustments over the last couple of years. I trimmed the Ethers exposure, which um, was probably the most recent thing, recent modification. What else did I sell? I had convex at one point, trimmed that exposure. We had the aura exposure. That was it. What else? I didn't sell anything else and exit or adjust or rebalance anything else. That's not part of the three rules, but that's definitely a process that drives people crazy. Is second guessing fear, uncertainty, and doubt with their chosen assets. That's why buying assets is the hardest thing a person does. They really need to, it's not conviction. Conviction is a short sighted terminology. It's more than conviction. It's you are going to execute. I am choosing this asset and I am going to see it execute. So, whatever is the next level up above and beyond conviction, that is a prerequisite for rule number one's execution. It's more than conviction. It's this is going to execute. I'm going to watch it. I'm going to stand by it, live or die. And I've done that with plenty of assets. And I think that that is a reasonable approach. It's not the best approach. Well, that's fine. It depends. Depends on whether you have a productive portfolio or not. So you can't neglect the size of your portfolio. If you have a smaller portfolio and you can't afford to let a position potentially dwindle down to zero, that might not be the appropriate course of action. So adjustment may be skewed for a portfolio towards the smaller size. And the larger size portfolio, you see it through because your portfolio is making revenue and that revenue is there to add to your cash position, to add to rule number one, further investments. So you have a capacity to really see an asset through to the end, either its downfall or its greatness. And that's something I appreciate about the three rules and something I strictly adhere to. But I can appreciate folks with a smaller portfolio having an increased risk aversion to seeing it through. If you're only if you're only making a small amount of capital, periodically on the weekly, maybe it's not the most reasonable to see something through if it's going to eat up a significant amount of your portfolio, 5%, 10%, 15%. You don't want to watch that evaporate into nothing. But then again, if you're watching something evaporate into nothing, maybe and you're uncomfortable about it, maybe it was incorrectly sized. Maybe it's too large and should have made it smaller. Took on too much risk. Or maybe it was incorrectly chosen. Is that something that I should have bet that size on? So those are another side of the coin. Maybe it is the psychologically correct thing to do to see it through, to watch the capital evaporate into relative nothingness, because that's a manifestation of your choice, your decision on what to purchase and in what quantity. And that's maybe the most important lesson of all is to learn how to choose the right position at what quantity and to see it through with that level up above and beyond whatever people define conviction as. Maybe that's the most important lesson. To always have a rigorously executed capital management strategy. No deviation, which affords us everything with regard to comfort. If I have no capacity to deviate from my methodology, I have very few options and choices, which means I don't have to react to headlines like this. I chose the right things. I have the right things. I picked the right things. I have the right size and things considering, all things considering the way I understand the system. Now, that's obviously few and far between how I understand the system, and dollars are the biggest business on the planet. So, if dollars are the biggest business on the planet, what's my biggest position size? What's the most interesting and most exciting exposure to dollars I could possibly have? And that's what nobody understands. Everyone is literally on social media talking about Curve stablecoin volume compared to Fluid or total deposits, and I'm like, y'all missing everything that's going on right in front of you. I mean, the potential for this yield basis is insane, and we've talked about it, and it's complicated. I mean, basically two things that were resistance to Michael's initial proposal was getting a bigger cut, and Wavy hit it the best. Wavy hit it the best. It was just right here. It's very simple. Bigger cut. Curved out wanted more money, and two, they wanted a slow rollout to manage risk. But you see, the problem with and here's Llama risk coming in with the rollout. If you have a breach, that destroys momentum, that destroys the protocol. There's no more trust when you're dealing with financial protocols. You can't afford a breach. Either you get it right and change the world, or something happens and the dream dies. And that's really what it is with crypto protocols. When you get them right, it's a big deal. So between Wavy and Llama risk, that's it. That's all this talk, all this conversation is just Curve DAO wants a better cut, and they want to somehow manage the risk, but you can't manage the risk. You have a breach, you have a breach. So it's a point that you can't even consider. You get it right or you don't. You can't manage the risk. It's binary. Works or it doesn't. So in my eyes, this is the biggest thing I could possibly see in these crypto markets with regard to dollar products. And I'm a fan of Frax. And they are building the on-chain central bank. But this is productive on a weekly basis. This is in a very different position. And this is me knowing what Aave is as a crazy money market. It's the largest DeFi protocol, like 60, 70, 80 billion dollars worth of deposits. What the hell is even going on with Aave? That's crazy. It's a bank. Was it like the 36th largest bank in the United States? This is the biggest. This is trillion. This size of this market is measured in the hundreds of trillions of dollars. Total addressable market. 10, if you would, $0 market. A couple $100 trillion. Why not? We won't go towards derivatives, but we'll go towards total euro dollars discussed by various persons. It's a couple $100 trillion. That's the global dollar market. That's the business. And that's what this product is. So release yield basis when? Now, please. If there's anyone, if there's anyone in these crypto markets whose mind I'm more impressed by, how am I supposed to phrase that? Michael's mind is incredible. What he's created over and over and over again with Curve and the various LP deployments, various pool designs, is there's no words. It's unique. It's that guy that does something that people don't. It's it's a big thing. It's profound. It's meaningful. Sometimes you folk, what do folks say? You don't invest in a person, you invest in a protocol, but sometimes it's the protocol isn't the person. I mean, Michael is not really it's not Curve DAO anymore. He owns a significant he doesn't control it the same way he used to pre-liquidation. He's a heck of a brand. If you're going to invest in anyone, that's the type of person that I allocate capital to. Someone that has built those kinds of things, and what Sergey and everyone. Well, not everyone, but certain names like Andre. Andre hasn't worked out very well in all his deployments, but that's a name that you have exposure to. That's why we have shadow exposure. Joseph Lubin. That's why we have Linnea exposure. And This is going to get fiery because if they got a TGE, you guys know what happens on Aave. There goes your looping, and guess what? Etherex is up in there. That's cool. So how do you have exposure? Aave, Etherex. You was cool. I don't hate on the smaller protocols. I just have the irony is the greatest irony for the captain is that I have a very low risk tolerance. Isn't that a weird thing for a guy in the crypto markets to say? Isn't that weird? I have basically no risk tolerance. Like I could expose to EtherX because I have my experience with the kingdom and I have a great deal of comfort with their implementation, especially their X33 implementation. Aave, no brainer. I could have exposure to that. I don't have comfort with the Euler exposure. I can't expose to so many protocols, and exposure literally just means owning some of it. Eh, I mean, look, Bunny got exploited. Brand new Bunny. I just very hard for me to own many things, and that has resulted in the portfolio that I have. Bunny is probably the closest thing that I have. I mean, it's small at this point compared to my original, what was it, VE Lit and the original Bunny implementation. Um, well, I mitigated my risk quite reasonably. Barely any exposure. I hope they pull through. I think Uni V4 and the hooks implementation. I hope Bunny something comes of Bunny. They put in a lot of time and effort as Uni V4 was deploying. Anywho, so EtherX and Aave, I like Linnea, and I have more than enough exposure to it. That's about it. Samsara is on the list on for Nirvana on on Solana. So Solana has a here. I haven't done this in a while. I got to get the comments. I only have another 40 minutes, but let's do metrics. Let's take a look at stable coins real quick. But all stables coming into $284 billion. That's up and to the right, ladies and gentlemen. Markets are doing what they're doing with regard to price action, but that's on the backdrop of just an up and to the right expansion of the market in the way that counts, which is stable coins. Mainnet taking the vast majority at 150 million, I'm sorry, $1 billion. Tremendous amount of capital just on mainnet. Tron, whatever, Solana comes in number two, $12.69 billion of just capital churning there. So while there's nothing really significant on Solana, in my opinion, there is a variation of soft liquidation on what a Kibo or one of the lending protocols. Whoopie do not interested, but this does garner my interest. This Samsara. This is interesting. So I don't. It's not live. This is DevNet, but I've been following along with RT. So if you don't know RT, uh, that's someone whose opinion I appreciate very much. He's quite a reasonable person. So, and I don't have Solana exposure, so this is something that I'm probably interested in. What else didn't I cover? Autopilot on base. More tempted more and more to use it. Still, I'm not using it. Tempted more and more. All right, let's take a look at gold again, man. That's crazy. 35.88 in the futures. Woo! That is screaming structural change in the system, which means the whole system fucked around and is about to find out. Seriously. I mean, Luke Groman's having a field day right about now, how gold is replacing treasuries. It is. But the margins take another 10, 20 years for things to really change at the core. Um, but a lot of his narratives have been spot on, in my opinion. And I don't want to hear one person say the milkshake was wrong. I don't want to hear anyone talk about Brent like that. That's not how we talk about Brent Johnson, father of milkshake. The milk, the milkshake father, the shake father, like the Godfather, the shake father. No, he's absolutely right in my opinion. I appreciate um, that theory. It's not a theory. It's just a rational sequence of events that makes perfect sense to me. So the dollar is going to go down. If anyone's screaming the dollar is going to go down, it's me. The dollar is going to go down for the next 10 years into the 2030s. I mean, anything with regard to milkshake. At some point, this goes to 500 and 1,000, and there isn't any currency left on the planet other than dollars. Thank you very much. That's my opinion, and I'm standing by it. Otherwise, everything's horizontal. Arrow at a buck 11. Not getting anything on the 6-month chart. We're squarely above the daily 100, weekly 10. These price levels that I look at. Now we're in this channel. That's a hell of a discount, folks. Got down to 30 cents. Um, Curve 75 cents. Some folks are looking at the 65 cents. I mean, maybe if you go to the monthly and you go to the 10 SMA and the monthly, which is still has yet to recover, but I don't think it gets there. I don't think we get the 66 in these market conditions. Maybe a wick below, but my general expectation is the weekly 10 to relatively hold, which is maybe a wick below to 65. All right, this makes about more or less sense to me. But look at that. We bounced right off for the weekly 10. And our resistance that we've been looking at for quite some time is this weekly 50. I still like this chart. Nothing has changed really structurally with it, especially being above the weekly 10. You breach below the weekly 10, then brings us back to June. And this breach below it, or this breach below it. So you have your deviation, but then you have your eventual continuation. That's my 2 cents, my opinion. Move still below 80. Trying to figure itself out. DXY perking back above 98, still below the weekly 100. I guess we're waiting on headlines at 2 o'clock from the White House. I think we're waiting on headlines and Fed cuts towards the end of the month. That's about it. Let's do some commentary. Mateo, good morning. Poncho, up or down, left or right? John Steps, good morning. Any chance you have an inside info on the new Tapioca leadership? I do not. I have nothing. At some point, they'll release something eventually, I guess. Maybe. I have no idea at this point. It's literally been years. What was that the end? Was that really the end of 2021 or 2022? Doesn't really make much of a difference to me at this point. If that investment was at the end of 22, three, five, four, we're talking going on 3 years. A little too long. See, I notice how I said a little too long. 3 years? All right, I'll take an investment that's 3 years. I won't hesitate on that kind of time frame or duration. Let's get in there though. Arrow, good morning, my friend. How are you? Greg, morning, Cap. Always, always, always. You're absolutely right. Joel, good afternoon. Arrow, looks like Mantle Bybit chose Merchant Mo. Yes, they did. Have you thought all about that? No, I have no interest. I don't need additional exposure. And I tried. I tried my Mantle exposure. It failed, and that's okay. You don't have to own everything. And I don't, I'm not, I mean, I guess Merchant Mo might do well. You don't have to own everything. And I is there cash flow on Merchant Mo? I don't know. I love their branding though. Love that branding. Merchant Mo, a Trader Joe. So damn good. Steak. 20% annualized. There's something about being able to get cash weekly. I don't want compounding. I don't want any of that. I don't want my staking rewards denominated in Mo. I want my staking rewards denominated in CRV or USDC or USDT. Okay? Period. Or FRX USD. I want compound. I hate this shit. This is something about rule number 3 that makes so much sense to me. Sir Joe, President accounted for. I brought it up in Discord the other day. Recurve metrics per DeFi Llama, not looking great overall. Would love to get your thoughts. It looks great in my opinion. Let's take a look. I bet you Fluid is a still not used to their new user interface. Uh, where is it? Where is it? Where is it? Volume. Volume. Dex volume by protocol. Yes. And mainnet. Fluid. 552, 464. And we'll see what plays out. But that looks pretty good to me. Look at this. Look at that. $2.282 billion for Uniswap. Who uses Uniswap? Who says Uniswap.com is the website I need to go to? Oh dear. I mean, obviously the aggregators get there, but look at Aerodrome and then the way social media posts highlight the vast majority of aggregators go through Aerodrome, not Uniswap. So why do the aggregators go to Uniswap over Fluid and Curve? Just weird. Have you tried out the new relays on 40 acres? You can get paid on your VE Aero and USDC. Well, let's take a look. 40 acres. Obviously, I like autopilot, but damn, 38 mil in deposits, 2 mil available. Huh. Join as a relay, borrow. Damn, they'll let me 42 grand against my stuff. That's cool. Join a relayer. What does that even mean? Balanced. Oh, okay, that's cool. Custom strategy. I want USDC. Thank you very much. 100% of it. Where's direct to wallet? Why no estimate? I want an estimate. Give me an estimate. So this is cool. This is a so basically they have an autopilot component to it. All right, go 40 acres. Obviously, they were first to production as compared to autopilot. Very nice. I mean, look at all these options we got nowadays. Crazy options. How exciting is these markets? We had nothing back in 21. There was nothing. There wasn't even trust. Nowadays, such incredible tech. Love this stuff. Do I not? I definitely. I should just turn that on. Notifications on. Okay. I have not, but I have very low risk tolerance, John. So I will not give up custody. I, I don't have any debt on anything that I own. I don't trust it. I will not risk liquidation. I do not use leverage. I just don't do it. Can't do it. Coinbase will get Solana flows too, I thought. Here's the thing. There's something about Solana that's just attracting how many billions of dollars? Oh my God. Stables? Good point about market cap on Solana. It's literally $12.69 billion. That's crazy, Arrow. And you go over to base, it's just 4.3. So it is what it is. Like the volume, if you go to volume on Solana, it's collapsed. Absolutely collapsed. The amount of money that's on Solana is extraordinary. Like, what the fuck is everyone's like, oh, I'm ready to gamble. Pumped out fun. I don't know. I don't know what it is, but there's a gold mine on Solana. So that's why I'm taking a look at this Samsara. And that's where I'm at with that. Just base is small. So Solana is 4 times, 4 times the size of base. It is what it is. Um, and just mainnet is the gorilla. Just nothing compares to mainnet. Mainnet is over 10 times the size of the largest mainstream network. It's just not Tron. Tron's got 80 bill, mostly Tether. Literally mostly Tether. It's literally 79.5 bill in Tether. And then Solana's got 12 plus. Mainnet's just huge, huge. Uh, Arbitrum bumping up yet? It's got a lot. 359 comes right after base. Polygon comes in right after Arbitrum. How do you like that? Avalanche, Sui in the list at 800. OP. OP. Good old OP. And then Mantle down to 644. Where's Sonic? 195. Lackluster. Linnea. 158. 5x, 6x. Multiples. Let's take a look at metrics. Volume, dex by volume. Linnea. It's all going to be an EtherX, obviously. Massive. Massive. And when Linnea incentives start, oh dear, it's gonna get weird. That's cool. That's why we got exposure. Very nice. Raul, hello. Joel, much a pleasure. Um, I think that covers it basically. Arrow, I don't think any of the major the only chain that I don't fully understand is Avalanche. I don't know where it's going. I hear the RWAs and I hear about integrations and I see all this stuff and I just don't see where it's going. I just don't. It's not that it's going or not going somewhere. It's just I don't see it. So I don't explicitly have exposure to it. And if I did, it'd probably be through like a Faro. I wish I got it cheaper. Maybe it is cheaper. Let's see where it's at. Faro coming in at 44 mil. That's still compared to the comps. Highly high price, high price protocol. Black was like 150 mil, and everyone was like, "Oh, Black's taking over," and then now literally Black's worth less than Pharaoh. You can't make that shit up. You can't. Arrogance just doesn't work. Check back when this thing will be 15. They'll cut another 50%. It takes a long time for the incentives to dwindle down. But in any case, this has, like Nile, Linex written all over it. So who wins? There's always going to be one. There's only going to be one. And by the time emissions start to balance out, I think Faro will be the one, especially if they upgrade it to X33 design. Rex 9% on the day, RAM 8% on the day. Everything else is marginal, 2.6 on Arrow. Velodrome is off the radar, a little bit below 5. Nothing else to write home about. Convex 3.5. This stuff is just everything is treading water. Everything is waiting for some things about the market to tell it what the hell it's going to do. And until then, it's just going to tread horizontal chop. I mean, you literally have a full retest of previous breakout conditions. That's where Bitcoin is. And it's done very well. If this closes on the weekly above 13,000, that'd be a nice bullish engulfing. That'd be pretty nice. Right here looks great to me. From that level type of structure standpoint, Ethereum looks like it's in a better position. It didn't even retest yet the previous highs. Can you see what I'm looking at? I'll zoom in. So there's your previous highs. Boom, boom, boom. Retest. There's your previous highs. Boom, boom, boom. Didn't get to the retest. It should be 4,100. So not quite there, which puts it in a better position. Just very simple, high level, top down inspection. Okay, let's see what the news brings us. Let's see what people get excited about. Let's see what people start to fear about the markets. Maybe more meaningful than what people get excited about. Fear is more has a greater effect on the markets than maybe exuberance at this point until it flips, and then things get weird. We're not at weird yet. Move isn't gradually moving down. DXY keeps perking back right towards the bottom of the weekly 50. I mean, you get a strong impulse down below 90 into the 96s, into the 95s toward the weekly 200. Okay, now you're talking, and you can start to see the nominal pricing of risk assets adjust accordingly. Just not there yet. Appreciate you all. Tuesday, September 2nd at 1:30 p.m. Middle of the week. I'll see you guys and gals again on Friday. 158 people made it to the end of the stream, and you are all now a little bit more rational because of it. Stay calm, cool, and collected. Make good decisions. Woosah, woosah. Take your time. If you're conflicted about something, if you're thinking a couple different thoughts, if you have some fear, stop. Do nothing. Woosah. The best decisions are made when you're calm. So stay calm. See you later this week. Peace.